average April, putting it all in, up 2%, which may not sound like a lot, but hey, if you compounded it through the year, it'd be pretty good, Simon.
It would be. Let's see how then April the 1st has started. There you go, 15 minutes into trade, and we are positive as things stand. Time for the first Friday trade of the second quarter. Wayne Kaufman is Chief Market Analyst with John Thomas Financial, and Lance Helfert is founder and president of West Coast Asset Management. Wayne, for you, it's all about sports.
Sports?
Is that not what you're recommending people? I'm sorry, I've got that completely round the wrong way. Let me redo that again. Lance, for you, it's all about sports.
Yes, I think there's a couple companies, talking about March Madness, baseball season just starting, and the NFL lockout. Nike is a great example of a company that's just a marketing machine. It's growing international. Gross margins are 45% and stable. They haven't had an issue with raising prices in the commodity environment we're in. Big buyback. If you look at their biggest competitor, it's probably Under Armour, and they have more cash on the balance sheet, Nike does, than Armour All's whole market cap. So they're far and away a leader in what they do, and everybody knows that. And then my second one is Hormel. They own, their namesake Hormel, but they also own Farmer John's, and they own a number of brands. It's a $7.5 billion company that most people have never heard of. It's half owned by the Hormel Foundation. They've increased their dividends now for almost 50 straight years. It yields 2%.
Do you not worry they're going to get squeezed, though, with the food price increases?
Yeah, they've addressed that in their conference calls. They've been able to pass it on to the consumers, and because they're more on the lower side of the food environment, they're still the low-cost leader. And so, if anybody's affected less, it's going to be Hormel. And they've got pricing for 10 years. They've got a backlog of hogs on there. They also have turkey. They raise their own turkey, so they should be able to weather that storm pretty well.
Wayne, what about you?
Well, Erin, I've got 3 stocks in the materials sector. Cliffs Natural, which is a producer of iron ore, which of course is used to make steel.
Yep.
Walter Energy, which is a metallurgical coal producer, also used to make steel. And Celanese Corporation, a diversified chemicals company. And for example, their stuff goes into concrete, plastic, which is used for bottles. And the simple trends here are China is in a huge build out. They're going to build 50,000 skyscrapers over the next 15 years, the equivalent of 10 Manhattans. Japan is going to need a major reconstruction.
Right.
And there's other trends like water. Overseas is water quality is very poor. They need a lot of water bottles. So these are, I think these are great places for people to put money.
All right. Thank you.
Got to leave it there. Thank you very much, Wayne. Thanks, Lance.